Value investing, an investment principle that became widely known due to Warren Buffett's adoption of it. Typically, it connotes the purchase of stocks having attributes such as a low ratio of price to book value, a low price earnings ratio, or a high dividend yield. The discount of the market price to the intrinsic value is what Benjamin Graham called the margin of safety. Well, Karim Chadid from BlackRock is with us now to discuss how BlackRock are using value trades in their portfolios. Thanks very much for joining us.
Thank you.
We've seen, value investment, as I said, they're around for a long time. Why is it that it's now coming into your portfolio, or is it just coming? Has it been there for a while?
So we like value segments of the market primarily because of the reflationary environment that we have been since mid-2016. But there's a key analysis here to look at, which is thinking about segments of the market that have started to do well because of this reflationary environment, the pickup in the economic recovery, the inflation data that we started to see led by the US in the second half of 2016 and then broadened out to the rest of the globe, versus segments of the market that have only started to do well because of the US election result. And value as a factor and value parts of the market are one of the areas that have started to do well when the reflation started and continued to do well after the US election.
It's really interesting because actually if you look up value investing at the moment, there are a number of articles out there at the moment. I mean, value investing is redundant, value investing is outdated, value investors banging their heads, nothing to buy. But obviously you disagree with all of that?
So we do think that it's been running for a while. It's been about 4 months now, but it comes after a very prolonged period of outperformance of another factor, a low volatility. And those trends can last a very long time. So even though it's been a couple of months or 3 or 4 months now, we do think it has more legs because it's a turn of a very long-term trend when value was underperforming. And given that we really believe the economic recovery is seeing a higher pace now, value can continue.
You mentioned a lot about the US and the US election, which has driven a lot of this reflationary pressure. If we are looking for value then, what particular areas are we looking at?
So the first way is quite easy. It's the value factor. So looking at funds with a value tilt. Then the less direct ways are looking at segments of the market, to your point earlier, that are trading on a low price to book or low price to earnings relative to history or relative to other markets. And there we land in segments like Eurozone equities, like Japanese equities, which are effectively cheap, and so they're value.
When you say a value tint, for those out there who don't quite know where you're going with that value tint, just explain what they should be watching there.
So it would basically be a fund or an index, a fund that tracks an index, for example, an ETF, that tracks an index that has a tilt towards value stocks. So effectively, it would be an index that is using a benchmark exposure, like a benchmark of Eurozone equities, but tilting towards the equities that are cheaper than the broader market.
Because this is the important thing, is that although we are seeing markets record highs in the US, although markets we are quite expensive, there are opportunities out there, and it's finding those opportunities, isn't it?
Yeah, exactly. So yes, US equities keep breaking record highs. Every couple of weeks you open the news and you see that headline. But it's not to say that there aren't opportunities in equities. We think there's a lot of opportunities in equities. Japanese equities offer value. Eurozone equities offer value. Some sectors, even in the US market, offer some value, like financials. So there are opportunities to look at.
Other than value at the moment, is there another area you're playing?
Yeah, so we also like diversification as a theme. So to your point around some segments of the market, like the US reaching record highs, there's uncertainty, and there are ways to address this uncertainty through having some allocation to gold as a diversification theme, or broader commodities as a basket.
And that's always important, diversification, though, isn't it? To make sure you've got that broad range in case something happens in the markets. We never know what Trump's going to say, for instance, and that can just change things completely.
Yeah, and certainly in a year like this one in Europe, where we have plenty of elections coming up.
So with the diversification, I mean, you mentioned gold there. What are the key elements you feel that need to be in our diverse portfolio?
So when I think about a diverse portfolio, I think about a portfolio that is not excessively exposed to one single factor or one single region. Rather, it is diversified across geographies. It is diversified across different currencies, asset classes, risk profiles. So you may have something that is high risk, but not your entire portfolio is in a high risk asset.
Okay, I'm going to leave it there, but thank you very much, Karim Chadid there from BlackRock, on how BlackRock's using value investing and also the importance of diversified portfolios.